Hi everyone, Jim Atkinson. Today we're here with Jake Borbidge, the Chief Investment Officer at Avidian Wealth Solutions. We're going to be discussing advisor transition. Jake, good to see you.
Glad to be here.
Jake, you meet with a lot of the advisors before they join Avidian during what we call the glide path period. What are some of the most important questions you have for them?
So we always try to understand where they're at, their investment philosophy, and how they handle their clients. There's a lot of variations across different advisors and how they handle their book of business. And there's a lot of ways we can interact. We want to make sure that there's at least a pathway where we can find some parallels, some things that we're aligned on from a philosophy standpoint as well as from a vehicle standpoint.
So we have some advisors that actually have spent many years working on their own investment philosophy,
Yep.
their own way of choosing stocks or ETFs or SMAs or whatever it might be. What if they say, well, I'd like to continue doing something like that or doing exactly that? What do you do?
So we don't push back and we don't force anybody to take our investment philosophy and just kind of go with it or just go on faith, right? We assume that when an advisor joins a business, we have a really great offering. A lot of them will choose to use our offering, but it's not a requirement. It's not something that we force advisors to do. And there's a lot of scale that we can bring advisors, even if they choose not to use our investment technology, our investment philosophy, or our investment products.
So you have some advisors who have spent their entire career choosing the stocks, the SMAs.
Yeah, running their own investment product.
Running their own investment product.
Yeah.
So how do you handle that? And then for those that may be at a wirehouse, oftentimes we see advisors who feel as though that wirehouse has something unique that you just can't replicate elsewhere, it can't be found. So how do you address those two concerns?
Yeah, and those two types of advisors are going to come from totally different backgrounds, totally different viewpoints. Number one, on where they're at and why they're coming to Avidian, right? We are not here as an investment team to force people to adopt anything that we're doing. I think about it as we like to pull people. We don't push people in any direction. And so if we have an advisor join that doesn't see value in what the investment team's doing, they're free to continue doing what they're comfortable with and what they think their clients' best interests are served as. My expectation and my goal here is to make sure that what we provide as an investment team is something that is so institutional grade that it's really hard to question why you wouldn't want that. But that's something that the advisor's in the driver's seat for. When we talk to advisors that are coming from a little bit of a different background, that brokerage background, I come from a big company. I know the difference between having a ton of resources at your disposal and working for a smaller company where things might be a little bit more limited. And from an investments perspective, what I've seen is that the opportunity set, the flexibility that we have at Avidian being independent is actually greater than what you'll get from the brokerage side of things. And there are other advantages that we can bring because we're independent, right? Brokers actually have to negotiate for our business in some ways. And so you'll have more flexibility at an independent. Now, there is that trade-off, right? You won't have that brand name on the door, but we think that there's a lot of benefits that we can bring with the independence where we can sit in a much more fiduciary role for our clients.
Do you think that's partly facilitated by the fact that we're multi-custodian and the custodians actually have to compete for your business?
I think that's a big part of it. Everything that we do, we're making independent decisions. So one thing that we do not do here at Avidian, we do not manufacture investment product. We don't operate a custodial platform. And so whenever we're choosing to use an investment product or a platform or any service, there are multiple entities, multiple investors, multiple shops bidding on our business. So we typically get pretty good rates for any of those relationships.
Tell me about the Avidian investment philosophy.
So we think about our investment philosophy as, number one, it's foundational. Everything that we do a lot of customized investing, things that are very bespoke for the individual client, but having a philosophy means that philosophy shows up in everything that we do. We think about our philosophy really in three different pieces. The first one being a foundational component that we are fundamentally an open architecture shop, which means we don't manufacture investment product, which also means there's never a conflict when you see something showing up in a portfolio. None of the funds, none of the investments, none of the individual securities or private investments that we choose for our clients provide any kind of revenue share, kickbacks, or anything that would influence our decision as a fiduciary. So everything that gets into our client portfolio gets there because it's the best solution for our clients. We're also a shop that focuses on efficiency. We have our own in-house trading department. We utilize ETFs and direct index SMAs where we think they make the most sense. And we're very focused on careful fee utilization. So we don't use active managers where we don't think they can win excess of their fees. We don't use private investments where we think a public equivalent makes the most sense. And we try to be really focused on how much active risk a client can have in their portfolio. And we deploy that active risk where we think the client has the best chance of outperforming. And then the last piece of our investment philosophy really focuses around private investing. We are believers in the private market space. We think it serves, without getting into a lot of the minutia, it serves a return purpose in a client's portfolio. We think we can get really good return outcomes in the private space that we might not be able to get in the public space. And we also think it serves a risk purpose where it can diversify. There are things that we can invest in private markets that you just can't get in the public markets. And in some cases, those can actually build more diversified portfolios.
Private markets are unique, right? It's not like a public market space where everyone can just go in and get access to it. And sometimes you'll find private market products in which, if they're at a broker dealer, they may be marked up, additional fees, or fewer opportunities. Oftentimes, they also don't want some of the smaller private market investments, meaning if the total fund size is $200 million, obviously a large wirehouse would tap that out immediately. You're not going to hear about it. Yeah. So what makes Avidian's access maybe unique, and what are some of the other opportunities within the private market space that you would have access to that others wouldn't?
That's a great thing to dig into. So I would say, first off, we have a very broad set and very diverse set of private market opportunities. Likely it's going to be much more diverse than what you're going to see at a large shop because we can use all the bigger funds. We get access to those things. And a lot of times we get access at better fee rates because we do have the ability to negotiate. So we'll get access to the same kind of big mega brand funds that you'll see at your Goldmans, at your JP Morgans, right, at your wires. You'll see those on our platform as well. But because we're smaller, accessing a fund that's only $50 or $100 million, we can still move the needle for that shop, and it can be a value add or a return add component to something that we do in our client portfolio. So there's a win-win there. Whereas at a bigger shop, they just wouldn't be able to utilize that. They wouldn't be able to put enough of their clients in that portfolio for it to really make sense.
Talk about the, because we've seen this on occasion, the co-invest or the sidecar opportunities that you'll get access to that you may not find elsewhere.
That's a great thing to think about. So like when we work with some of these more niche providers, and we are believers that there are pockets of expertise in smaller pockets of the market. We call them niche, or we call them kind of focused private equity, private credit managers that really know their space well, but because they're very niche, they cannot raise large funds, right? So we can partner with those funds. We can partner with those sponsors to build really good relationships. And that relationship benefits our clients in a couple different ways. One is that we're typically, because we are very relevant to those smaller companies, those smaller sponsors, we can get better terms. A lot of times we'll be able to bring down the terms in terms of overall fee rates. We'll be able to get discounts on the fees. Those pass directly to our clients. We'll be able to get reductions in the minimum so we can access a broader client base, or broader set of our clients can access these investments. But also, as part of that relationship, we'll get co-investments, which means part of those portfolios will come to us directly without any fees or without any performance fees. And again, those savings, that additional return you get by not having to pay a fee, that goes directly into our clients' pockets.
So an advisor transitioning is going to have a lot of concerns. One of them being, will my investments transition? Will my clients adapt well? And I'm sure there are a lot of concerns that your investment team would have around how do you smooth the transition? So what are some of the things you look for, and how do you guys prep for an advisor coming on board?
So we can do a little bit of work before the advisor even joins, and we'll do that through the discussions we have, just kind of getting to know you meetings. And really what that's intended to do is understand the scope of services that the advisors typically used to using, what they like to keep ownership of, what they like to outsource, and also things that they have been doing that they might not want to do going forward, right? I mean, our mission statement as an investment team as it relates to advisors is really just to be a force multiplier for their book of business, right? So where they've been bogged down with certain things, we want to take them off their plate if they're willing to give them up. Those are the kind of things we can do even before we sign with an advisor where they've made a commitment to the firm. And then after they've made a commitment, we start to see data, right? We start to see how their clients are positioned. We start to see what they're invested in. And we have a team that's going to look at where they're at. We'll talk with the advisors and figure out where they want to be. And then we come up with a transition plan. And that transition plan is not I join the firm on day one. On day two, my clients' portfolios get traded. That transition plan is, okay, advisor, you're going to sit in the driver's seat. You're going to have time to work with your clients. We're going to come out with a plan that's going to be very tax aware so that we don't just flip a switch and create a lot of taxable issues for your clients. So it's going to feel much more like landing in a couch as opposed to landing on a hard wooden chair.
I like that, and I know that some of the advisors as well have mentioned how they appreciated the fact that your team would communicate with them every time they engage the client in making those transitions, because that period, the first maybe 6 months when you're starting to do this, can be kind of a scary time for some of them.
Yeah. I mean, we definitely don't want, and advisors will have to do some work when they join, right? Well, I want to be upfront and say it is not a work-free scenario, but we want to make sure that we keep the clients first and foremost. And so our clients should only see upgrades when they join Avidian. They should not experience any of the back and forth or the noise that comes along with a merger into another shop. They should just see the benefits, and so that's our main focus.
One of the things that your team has built out is a client portal. And I know that you didn't go out and buy a client portal, which there are a lot of them, and some of them come embedded in the technology you've already got access to.
Yeah.
You actually built it, which is unique. And I'd be curious as to why did you build it, and how is it different than others that you couldn't have just gotten off the shelf?
Yeah, that's a great question. I think, when we did the shopping, it would have been like trying to go buy an electric car in 2002, right? There weren't on the market. You could think about it and you could talk to somebody about it, but you couldn't actually go out and buy the product. And so when we talked about this is the portal that we would like to buy, and we went shopping, there were no stores, right? There was nothing on the shelf that would serve what we were trying to do for our clients. And we said, hey, if we think, we really feel strongly about our clients needing something to serve their investment needs, to serve their wealth management needs, and it doesn't exist, we're a firm that's going to go out and build it for them.
Okay, so how is your portal different? Because my understanding is what you built is something that to this day isn't really out there.
Yeah, I mean, we're still looking for, we would still take the opportunity to buy something, right? We always take the opportunity to buy if it's possible. It's still not something that we've seen the ability to buy. And so a couple of the features that we've noticed that we're still waiting on others to develop are the ability to bring public assets and private assets together in a portfolio context where you can see your whole portfolio. You can see everything that you're invested in. You can see how it's doing. You can also see your own kind of customized pipeline, which means if there are other private investments that you may want to take action on as a client, or even that you may as an advisor want to introduce to your client, you're going to have some line of sight through that portal, and all that being in the same place in a way that's just kind of made easy for your clients is something that we still do not see a competitor offering that.
So my understanding is that portal also will indicate, so it'll show vintages, it'll show capital calls, capital deployed. So it'll give them a snapshot of all their private investments in one location. Is that correct?
That's correct. And you'll be able to see also a little bit of a line of sight if you've made commitments, but you haven't funded them yet. We don't want you forgetting about those. We help you keep on the same page and keep up to speed with your commitments, but you'll also have that data available to you through the portal.
So your team also routinely adds new investments. And my understanding is in the portal, there's also a component that allows them to go in and do a little research.
That's right. We provide kind of contextualized research. So anything that gets onto the portal, just know that it's already gone through the investment committee. So we've done our own due diligence, but then we know that our clients like to do some additional due diligence on top of that when it comes to private markets. And then we'll supply a lot of detail. We are a fully transparent investment shop. We don't think anything that we do is black box. So we provide as much detail as we're, legally and compliance allows us to do through that portal. Sometimes that's things, as basic as a slide deck from a potential private equity sponsor. Sometimes it's an interview on video with somebody from the Avidian team and the private sponsor answering very specific and in the weeds questions. But all that stuff is made available through the portal.
Jake, what are some of the most important things you want to communicate to advisors that may be joining the firm?
So I think understanding our philosophy and how we interact with advisors is important. And so we really have, as an investment team, our mission statement for how we interact with advisors is we want to do two things. We want to make sure that our clients get institutional grade investment results, and our advisors, we help them look smart when they interact with their clients. And so as an investment team, as long as we're doing that, we're hitting our goals. We're going to hit home runs from an advisor to investment team relationship. But I think at the end of the day, what we want our advisors to understand is that we're here to lift them up. We're not here to take credit for them. We're not here to stand in front of them and beat our chests. We are here to lift our advisors and put them in a better position to win.
Every now and then we'll see an advisor meet a prospect that is very sophisticated. very large. How do you help them out besides just some of the materials you've got, the investment solutions? Will you go into a meeting with them and sit down and discuss this with the client?
Yeah, I mean, those are some of our best days here at Avidian is I get to meet the actual clients. Advisor's always in the room. I'm not going to try to steal a relationship or anything, but we get to have great conversations with clients, and sometimes we do dig deep into the weeds. And the good thing about that is I know how to get in the weeds. I've built every type of investment product in a prior life. The advisor doesn't have to keep that knowledge base, right? They don't have to feel like they need to know all of the weeds. That's what we're here. We're here for that kind of backup.
You've done this a long time, but how do you prep for a meeting like that? You obviously don't know the client and you don't know the investments, but maybe the advisor gives you the investment thesis or where he wants to go with this before you walk into that meeting?
Yeah, anytime we interact with a client, we'll always have a prep meeting, just even a quick sidebar with the advisor, and that'll help, one, make sure I'm dusting off the knowledge base for myself. A lot of times there's materials the advisor wants us to bring as an investment team just to kind of help the discussion along. And so we always make sure that we're on the same page. So I'm not bringing something to a client that the advisor has just told them the exact opposite, right? Because again, we make sure our advisors look smart. That's number one goal.
That's great. Thanks, Jake. Appreciate it.
Sure, Jim. It's been fun.